Australia's Business Channel.
Caller waiting patiently. Ken from Brisbane. Hi Ken, how can we help you?
Yeah, thanks Chris. I just wonder what the panel and yourself think about Macquarie Telecom for the next couple of years.
Okay, so talking about Macquarie Telecommunications, high quality business, A2, which is the second best rating I can give a company. Its intrinsic value is growing at a very, very good clip, basically since 2009. It's going up, I can tell you, it's going up at about 20% per annum over the next three years or thereabouts, but it's expensive compared to its intrinsic value now, even after the most recent decline. So unfortunately, that's the case. With Telstra, well, everyone's got to remember that, yes, they're going to get a gigantic cheque from the government over the course of a few years. They can do a bunch of things with that money. One of the things they can do is they can pay it back to shareholders. All right, so what does that do? Well, that reduces their equity, gives everyone potentially a fully franked dividend, and great. And then what next? The other thing that they can do with the money is retire debt. Then nobody gets the money except the banks. So the banks are delighted, but nobody else. It will become a competitor to Optus and Vodafone, and sure, it's winning customers now, but I get a very strong sense that this is a capital-intensive business. Every time I win some market share, the competitor goes out and installs, better service or better coverage or whatever, and then you're just running for dear life just to stay in the one competitive spot. It reminds me a bit of a card game where the three of us get together, we close the doors and the windows. One year you've got all the chips. The next year I've got all the chips, and we're just passing it around. It's a bit like the media industry in Australia with their audience share. I just don't. I think there's growth in the market, but nobody seems to be making a lot of money out of it.
I think that's for us tonight.
My question is regarding GDO Gold One. I'm holding a parcel for a very long time, and the medicine offer 55 cents each. I'd just like to know your views.
But Roger, we might start with you and then go back. GDO or gold sector?
Yeah, look, I own gold. I have owned it for some time. I've talked about
how do you own it?
I own it through futures contracts for June delivery, and I'll roll those. Now, gold price has been falling most recently, of course, and as everyone knows, George Soros recently sold $800 million worth.
That'd be a currency play as well, though, isn't it? Or,
well, potentially, he thinks it's the mother of all bubbles, and mind you, he called it the mother. It was the mother of all bubbles, and he was long it. Now he's out. What's interesting is there's two guys in the world who I have a great deal of respect for their ability in commodities. One is George Soros, the other is Jim Rogers. I know Jim. Both of them ran the Quantum Fund. They founded the Quantum Fund together. Now they've got completely opposing views. Jim's a long-term bull, saying it could go to $2,000 an ounce or further, although he has said recently that it could correct 30 or 40%, and that would just be a consolidation. So who knows? I'm no good at predicting these things. I usually rely on Jim's view. So I own some gold. I prefer to own physical commodities than companies, and I accept that there's leverage from owning the companies, but I don't like the fact that there's stock market risk, execution risk, production risk, agency risk, whereas if I've got a view about gold, I just take an exposure to the gold. We do have, I should confess, we have one gold stock in our portfolio, and it caused a bit of a stir on our blog actually, because I haven't confessed to anybody what it is, and I'm not going to tell them.
And so you're just going to say how to annoy
I will tell you in the break. I will tell you in the break. But it's not Newcrest. Newcrest seems to be a bit expensive for me.
Okay. Richard, how can we help you tonight?
Hi Chris, thanks for taking my call.
No problem.
Look, just the panel's opinion and valuation on the ASX, and if possible, Roger's valuation on car sales. Thanks, mate.
Car sales. Okay, no trouble at all. Just a quick bit on ASX and then car sales.
Yeah, okay. Thank you.
If that's all right.
Thanks very much.
Reminding you about the car sales.
Thank you for the opportunity.
In case you forgot the second bit.
So the ASX is worth $21 or $22. The share price today is significantly above that, but it's also the same as where it was back in 2005. So the share price hasn't changed in, 6 years, and it seems still to be expensive. Ben, not to intentionally disagree with you, I think there were some very real national security issues with leaving or giving control of the ASX over to Singapore. The big problem that I had, and I'll just do this very, very quickly,
no, you're
my
right.
apologies.
Yeah, yeah.
The big problem I have is once you sell it to Singapore, if they've paid too much for it, which they were paying too much for it based on my valuation, then it becomes a kicking thing. You know, they could flick it to somebody else.
Yep.
And you can't control who they ultimately sell it to. That's another issue. It wasn't the reason that they blocked it.
Yeah.
But it's a concern of mine, and I raised that concern publicly when it was announced. Car sales. I spoke in, I think it was February or March, about a rumour that had come across my desk that News was planning to join 3 of their biggest customers and start up a rival. That's now happened.
Right.
What does that mean for car sales? Well, I suspect that for a time you'll find that the mutineers will try and get some success from the new venture, which is Cars Guide, but they'll remain advertisers on car sales because ultimately what do they want to do? They want to sell their cars. If that becomes more successful, then they may leave car sales altogether. And this demonstrates one of the key problems with lists. The most successful businesses on the internet are lists. Car sales is a list of cars. What they benefit from, the competitive advantage they benefit from, is something called the network effect. But it's not a permanent competitive advantage. Somebody else can come along, steal your customers, and create a network effect of their own. The network effect is this idea like Seek and realestate.com, where more real estate agents put their houses on realestate.com because more people are looking for houses on realestate.com. And more people look for houses because there's more houses. So it's sort of this virtuous circle. It's called the network effect. But it isn't permanent. It's not a forever competitive advantage.
Okay, good stuff. Thank you very much for that, guys.
I should say it's expensive. Car sales is expensive.
Right, from Perth, who's written in. And he would like the panel's technical and fundamental opinion on Rialto Energy in the short and the medium term.
Look, it's pretty simple, actually. You know, the reality is that how does the sovereign risk play out? It actually has an effect on the performance of the company ultimately. It might be disguised for a few years, but eventually it demonstrates itself. Look, the reality is we're not talking an investment grade company here. If you buy companies like this, you're not investing, you're speculating. And really, you know, you put your finger in the wind and hope the share price goes up. But it's not investing.
Fair enough. Okay, thanks for that, guys. Listen, we'll go to our next caller. We've got David on the line from Noosa. Hi, David. How can we help you tonight?
Yeah, hi, guys. I'm just looking in that Computershare for my self-managed super fund. And was interested in the panel's view on its valuation and future.
Yeah, listen, thanks very much for your question. Computershare, we get a fair bit of time.
I agree with you on Computershare. It is pricey. The analysts are bullish, and I can see that in sort of their expectations for intrinsic value going forward. It's interesting that, you know, over the last 5 years, or 4 or 5 years, there's been no net increase in intrinsic value for this business. So it does have a competitive advantage. It entrenches itself into the process that's associated with being a listed company, and once you've sort of embedded yourself in there, you really don't switch. Interesting, I'm going to have a look at the company that you mentioned. I'd hope that they will pick up a company for their registry business that's going to be around a bit longer than some junior miners.
And how can we help you?
Hi panel, thanks for taking my call. I guess, Roger, this one may relate to you a bit. M2 Telecommunications business. And I was after the forecast future intrinsic value on it. And one thing I've got to ask you, when you give the recent valuation of this company, were you using 2010 or 2011 forecast figures on it?
Okay, the future intrinsic value. That's even harder.
I missed the second part. I've got the company, but what was the second part of the question?
What year? 2010 or 2011? What year's earnings are you using?
We're about to finish 2011 financial year, so you'd start to look towards 2012. This is a business that I like. I've got an intrinsic value actually of $3.61. For this company, which is not far away from its current price. The weaker the price, the price gets, the more attractive it becomes to me. This is one of the few businesses in the telco space that we actually like. We like this one, and I mentioned Vocus, not really telecommunications, but internet services. very good business.
Yeah. Okay.
And it's not particularly expensive at the moment. Remember I said earlier right at the start of the program that there are a few businesses that are good quality and cheap. There aren't many. This is one.
This is one of them.
Australia's business channel.